The tech rally taking a breather this week. The XLK on track for its fifth down day of the last six. My next guest suggests being selective when it comes to tech and looking to healthcare for some balance. Let's bring in Amy Kong of CI Barrett. Welcome. It's nice to see you. Welcome to our show. So big tech. Let's start there first before we get to healthcare, because you're Apple, Alphabet, Microsoft, and NVIDIA. Where do you think the bar is now heading into earnings season for these companies?
It's certainly high, at least higher, Scott. And we are cautious going into the earnings season where with new money, we are getting a little uncomfortable buying into this market rally that we have seen. I think earnings will be okay. But in terms of adding money to the new market, we are taking a little bit of a pause.
How do you address valuations when you look across the board from what they were at the beginning of the year to where they are now? Are you comfortable? Are you getting a little concerned that maybe some of them are over their skis?
You know, as an investor, you never say no to a rally. But when we look under the hood, we are uncomfortable in terms of how we've gotten there. Market multiple expansion has really been the key reason why we've seen this rally. Not to mention the narrowness of the market expansion is really driven by the top 5, maybe 6 names.
How are you thinking about AI in general and what it's meant to this space, the sort of hype versus the hype and hope versus what the reality is? Some folks talking about a bubble in the space. Or not?
Yeah. The megatrend is there, and we do like the megatrend. But when you think about realistically, how do you execute that trend, there could be some bumps on the road. Regulation, I think in terms of thinking about talking to a bot of your medical history and getting some, actual medical advice, I think there's a little bit of bumpiness along the way, and it probably gives us probably a better window to get into some of these names. But when we think about AI, we think of it in a couple of different ways, whether it's hyperscale cloud infrastructure, Amazon, Microsoft, whether it's pure plays like NVIDIA, or even strategic consulting like Accenture. Those are names that we are in right now.
So let me go through a couple of names with you. Speaking of valuation, your expectation for Apple going into earnings season, where that's one that people point to and say that valuation makes me a little nervous, over 30 times. And a new all-time high for that stock in recent weeks.
It does give us a little bit of a pause. Same with Microsoft, trading at about 31 times. But we think about their PEG ratios, which I think is still reasonable right now. The fact that with Apple, their service segment, if you would, which was probably about 10% of revenues, growing to closer to 20 today, margins above 70%. I think those metrics give us a little bit more comfort levels owning these stocks over the long term.
All right, let's talk healthcare. Great sector last year, undoubtedly. Laggard this year.
Yeah.
Second half going to bring something different?
I think it's going to be case by case, right? Large cap pharma has probably been taking a pause with regards to divesting. We've seen that as a trend. I think they're probably going to pick up M&A between now and maybe the next couple of quarters, and that could add a little bit of excitement. Biotech, depending on which types of companies we're dealing with, I think there could be some excitement there, whether it's within large cap biotech, whether it's eye diseases or weight loss, you name it. I think we have to be very selective. Managed care is taking a little bit of a breather after outperforming last year. Mm-hmm. I think we're probably going to hit a little bit of bumpiness with regards to the elections coming up in 24.
What about medical devices? Because Thermo Fisher is one of your top holdings.
Yeah, we like them, but I think they're taking a little bit of a pause this time of the year just because they've had that COVID pandemic hype, if you would, and a lot of these companies are starting to really normalize their earnings.
Lastly, real quick, JP Morgan. I mean, the banks get everything going in earnings, and this is actually the best performing large bank of the year stock.
Yeah. It's one of those set it and forget it kind of stocks. Valuation is a little bit on the higher end. We think earnings coming into this at the end of this week actually could be okay, but loan provisions probably will tick higher for some of these larger banks.
We'll see you soon. Thanks for being here.
Thanks, Scott.
All right, that's Amy Kong joining us right here at Post 9.